With market uncertainties and shifting economic trends, who better to break down the risks and opportunity on a macro level than Jeffrey Kleintop, Chief Investment Strategist at Charles Schwab. Jeffrey, thank you so much for joining me.
Pleasure, Shannon. Thanks for having me.
So let's get into it. It's the big question right now, market, global outlook for 2025. What are you seeing? What are the risks and opportunities right now for investors?
I have a pretty bright outlook for 2025. I think it's the first year in, 3 years that global economic growth is actually going to be improving. We're going to see a lot of growth outside the US, Europe recovering this year, Germany, Japan, Canada. A lot of the world's economies are actually going to be growing faster in 2025 than they were in 2024. And along with that may come earnings as well. So a brighter outlook. Sure, there's risks, but finally seeing some momentum outside the US for the first time in a while.
So let's actually debunk tariffs a little bit, because there seems to be a lot of confusion around it and what the impact is actually going to mean, especially on the end consumer. So let's myth bust a little bit here.
Sure. So when I see the bark is worse than the bite, what I really mean is that Trump has implemented a lot less than what was threatened on the campaign trail. I mean, the campaign trail, he talked about 60% tariffs on China. Well, they were actually 10. He talked about tariffs on Mexico and Canada, 25%. They were delayed and not implemented. Colombia as well. I think we're going to continue to see this. He's talked about steel tariffs, 25% on steel and 25% on aluminum. I don't think we see those, at least not on aluminum here in the US. So I think a lot of those get reduced, and the impact is, again, more bark than bite. In fact, the global economic impact of all of these tariffs, even if they were to go to 10% in the US, would maybe shave off 1/10% off of global economic growth. So we still see a brighter global economic and earnings picture in 2025. Hey, there's a lot of risk around it, but I think it's I think still the bias to the markets is to the upside.
So let's dig into that a little bit then. When it comes to the risk and opportunities, obviously investors are just now starting to navigate 2025. So what should they be looking out for this year?
So there is a rotation in leadership, and I think we're starting to see international markets outperform. German stocks are up 12% this year versus the S&P 500. That's through today anyway. And I think that's a trend we're likely to see. For one thing, a lot of the tech leadership, which is really what US is all about. The US is basically a tech ETF. That's starting to fade a little bit. Then we're seeing financials and energy and materials and industrials start to lead the way. And that means a lot of other countries around the world are starting to perform better. Their valuations are lower, and now they're seeing better economic and earnings growth for the first time in 2 years. So we're actually starting to see leadership outside the US. So for investors who've been underweight international, maybe it's time to rebalance.
So let's talk technology then for a little bit. Obviously, we are very heavily weighted in S&P with technology companies. Is that a concern, or should it be a concern at all for investors?
To some extent, I think it could hold back the S&P 500 this year relative to international markets. Tech is not a bad place to be, but it's been the only place to be for so long. I think we do see a little bit of a reckoning there, maybe a little bit of a sideways move. One of the challenges when we look around the world is where is the momentum, where investors are likely to get more optimistic. And if you look at on tech, they've been very optimistic. They've not been so optimistic in areas like financials and industrials and others. So a lot of those areas I think are likely to perform better.
And one more question though, alternatives, massive topic in our industry right now. Is that also an area that investors should be considering for 2025, or is it really obviously just dependent kind of on your values and where you want to be diversified?
I think it depends on everyone's individual goals and how their allocation looks. I'm liking public markets this year. Actually, international markets, again, the US was the only place to be for so long from an equity perspective, and really just in a handful of stocks, right? The Mag 7. Finally, we're getting broader performance in the market, so you don't have to be so specific. You can be broadly diversified and still see solid gains this year.
Well, I certainly appreciate your optimistic outlook, Jeffrey. Thank you so much for your insights.
You bet.
For wealthmanagement.com, I'm Shannon Rossick.